Hello everyone, and welcome. Today we're going to explore one of the biggest shifts happening in real estate investing, how AI is transforming the way investors analyze deals, make decisions, and scale their portfolios faster than ever before. In this lecture, we will discuss why AI changes real estate investing forever, the core investment metrics AI will calculate, rental ROI modeling with AI, flip analysis workflow, cash flow scenario modeling, risk versus return scoring with AI, building a deal pipeline with AI, using AI for market intelligence, advanced prompt chaining for investment decisions, and finally, your investment analysis action plan. Why AI changes real estate investing forever. Real estate investment analysis has always been time-consuming and complex, requiring either expensive software or advanced spreadsheet skills. AI removes these barriers by allowing investors to run rental ROI calculations, flip analysis, and cash flow models in minutes using simple prompts. This means investors can evaluate significantly more deals in less time, identify better opportunities, and uncover risks that manual analysis might miss. The ability to scale analysis is what gives AI-powered investors a major competitive advantage. The core investment metrics AI will calculate. Before using AI effectively, it's important to understand the key metrics it calculates. Cap rate measures income relative to property value, giving a quick sense of profitability. Cash-on-cash return shows how much return you're earning on your actual invested cash, especially important when using financing. Gross rent multiplier helps quickly assess value by comparing price to rent. Internal rate of return, or IRR, evaluates the total return over time, factoring in both cash flow and appreciation. AI can instantly compute all of these from basic inputs, turning raw data into actionable insights. Rental ROI modeling with AI. Rental investment performance is never based on a single outcome. AI allows you to model multiple scenarios, including best case, base case, and worst case conditions. By adjusting variables like vacancy rates, rent growth, and maintenance costs, you can see a full range of potential outcomes. This approach helps investors understand both upside potential and downside risk. AI can also calculate break-even rent, which shows the minimum income required to avoid losses, giving a clear picture of how resilient a deal is. Flip analysis workflow. Fix and flip investing relies heavily on accurate numbers, starting with the after-repair value. AI simplifies this by calculating the maximum allowable offer using the 70% rule, ensuring investors don't overpay. It also models total project costs, including financing, holding costs, and selling expenses, to estimate profit and return on investment. By stress testing different scenarios, such as cost overruns or lower than expected sale prices, AI helps investors make more informed and disciplined decisions. Cash flow scenario modeling. Cash flow is the foundation of a stable investment, but it can change under different conditions. AI allows you to stress test properties against events like rising vacancy, declining rents, or unexpected repairs. It can show how these factors impact monthly and annual cash flow, and how long your financial reserves will last. This type of analysis helps investors prepare for worst-case scenarios and determine whether a property can survive market fluctuations. Risk versus return scoring with AI. Every investment comes with risk, and AI helps quantify it. By evaluating factors such as market conditions, property quality, tenant stability, and financing terms, AI can assign risk scores to each deal. These scores can then be combined with return metrics to calculate a risk-adjusted return. This allows investors to compare multiple opportunities on a consistent basis and choose deals that offer the best balance between risk and reward. Building a deal pipeline with AI. Successful investors review many deals before choosing the right one. AI makes this process efficient by enabling quick screening of properties using standardized prompts. Investors can filter deals in minutes, focusing only on those that meet key criteria. By tracking these deals in a structured system and using AI to summarize and rank them, investors can consistently identify top opportunities without wasting time on weak prospects. Using AI for market intelligence. A strong investment is not just about the property, but also the market it's in. AI tools can gather real-time data on rental demand, vacancy rates, rent trends, and economic indicators. This information helps validate assumptions before running financial models. By understanding whether a market is growing, stable, or declining, investors can avoid making decisions based solely on property-level numbers. Advanced investors use AI in a structured sequence. First, they gather market data. Then they analyze the property using that context. Finally, they combine everything into a clear investment memo. Each step builds on the previous one, resulting in a complete, data-driven evaluation. This method creates a professional-level analysis that can be shared with partners, lenders, or used for personal decision-making. Your investment analysis action plan. To apply everything covered in this lecture, start by selecting a property in your target market. Run a quick analysis to determine if it meets basic investment criteria. If it passes, perform a detailed ROI model with multiple scenarios. Then stress test the cash flow and calculate the reserves needed to handle adverse conditions. By following this structured approach, you can evaluate deals efficiently and make smarter, more confident investment decisions. Conclusion: AI is fundamentally changing how real estate investment decisions are made by making complex analysis faster, more accessible, and more accurate. Instead of relying on manual calculations and limited deal flow, investors can now evaluate multiple opportunities, model different scenarios, and understand risk with far greater clarity. By combining financial analysis, market intelligence, and structured decision-making, AI enables a more disciplined and scalable investment approach. Those who adopt these tools early will be better positioned to identify high-quality deals, manage risk effectively, and build stronger real estate portfolios over time. Thank you for watching.